All right. So there's nothing scarier than hopping on the charts, not knowing what you're going to do, right? Like, have you ever gone to a trading session and like you just been displaying horrible habits, like you just been over leveraging, over trading, and then the very next session you hop on and you're like, yo, I cannot control myself. I don't have any self control and I'm unpredictable and I'm afraid of what I'm about to do. And that right there just lets me know that you have the awareness. And if you have awareness, then anything is possible at that point. So it's not the fact that you ain't got that dog in you, it's the fact that you got two of them in you. No diddy. So this video, I'm going to teach you how to take control of your trading. So you have two wolves inside of you constantly fighting. One is dark, filled with despair, scarcity, and desperation. And one is light. The other one is light, filled with hope, abundance, and composure, right? Which one wins? I would like for you guys to put the answer in the comments. And I'm gonna give you a couple seconds to go ahead and do so because I have to tell you before I get started. So go ahead and put your answer into the comment. I mean, who would win level? I know the dark one is probably winning right now. That's why you clicked on this video. So you getting your ass whooped by the dark wolf or whatever. But if it was even playing fields, right? Just fresh start. Which wolf is winning? Put the answers in the comment. Hurry up. I'm trying to get this over with. All right. So the answer is whichever one you feed. That's the answer. All right. So dark wolf versus light wolf. Which one wins? Whichever one you feed. Whichever one you nourish. Whichever one you care for, you treat the best, you invest yourself into, that's the one that wins. And the other one will die if you starve it. Okay. So I know that sounded crazy, but I mean, it's the truth. So that poses the question, what do these wolves represent? How do you feed them and how do you starve them? So there's a lot of different ways that I can put these wolves as representatives, right? All right. So in this situation, I'm going to be talking about neuroscience. I'm going to be talking about your brain. The prefrontal cortex is the light wolf and the amygdala is the dark wolf. The prefrontal cortex is known as the CEO, the logical brain, where the amygdala is known for threat response. It's your monkey brain. It's more emotional, right? And the difference between the two is when you have those days where you performed your absolute best and you're so proud of yourself. Excuse me, my words beat my ass. So it's those days in those trading sessions where you did the best that you could, executed everything on the money, and honestly, the outcomes don't even matter. Like if you lost the trade, you know you did right, and if you won the trade, you know that you did right, no matter what. And that's kind of like that flow state. That's that space that you want to maintain and be in, but it's very hard to maintain that. And I'm going to tell you why. Versus your amygdala, which is your tilt brain. That's the brain where your emotions take over and you call yourself, quote unquote, undisciplined and you need to be a disciplined trader, which I don't really subscribe to when people say that, because discipline isn't an identity. Okay. Discipline is an act of change. So if you're having a hard time following your trading rules, that just means you're not a successful trader. That's just your identity, right? So it requires discipline because there's friction, there's internal friction. It's very hard for you to follow your rules and execute flawlessly every single session, which means it's not a part of you. It's just not who you are. So you got to remain disciplined long enough for that change of identity. And that's what discipline is. It's just nothing but an act of change, right? Until it becomes second nature and there is no resistance and you just do it without even trying. Therefore, discipline is never needed. Okay. So we have the amygdala right here, as you can see, right? This is like a little stock photo. So excuse the bullshit on it. So the amygdala is the brain's alarm system, right? Or alarm center. It detects threats and it starts your stress response. It basically puts you into fight or flight. So whenever you lose a trade, it's a threat to you. Okay. What could that threat be? That's something that you got to figure out yourself. I know for me, every time I lost a trade, I felt like it was steps back away from my goals and the life that I aspired to live. So every time I lost a trade, it just means I was that much further away from my goals. So therefore, I would get triggered, fight the market, try to get closer to my goals, and force my will on the market, go on tilt and blow up, right? So that also goes down to redefining what you call a loss. So, or how about this? That goes to how you define a loss, and also what does it mean to step further away from your goals? Because if I sit here and I said every time I lose a trade P&L wise, and that's a loss, I'm stepping away from my goals. But a successful trader would say every time you bend your rules and don't follow the process, that's really a loss, and you're actually stepping away from your goals. Okay? So a red day could be defined as you succumbing to your emotions rather than sticking to the plan. Where a green day could be defined as no matter what the P&L says, you stuck to your plan, right? Then you have the prefrontal cortex right here, right? Which is the brain's CEO. Analyzes information and designs a response. It creates a plan to respond to stress. So the prefrontal cortex, like I said, are one of those days where you have this magnificent trading session. You did everything you were supposed to do, regardless of wins or losses. You were the ideal trader. You were the trader that you aspired to be. It's almost like going to the gym and getting a pump, and you get a glance of the future because you got that pump and you can see what your muscles can look like in the future. You get a glance of what you can be, right? And that alone is very addicting, okay? So, like I was saying, the prefrontal cortex, that's the reason why you will become successful, why you'll be successful, right? As a successful trader, financial freedom, all that good stuff that we're chasing for, okay? But here's the caveat. Even though the prefrontal cortex can grant you financial freedom and grant you all of your dreams and aspirations, the amygdala is stronger than the prefrontal cortex. It has the ability to literally shut it down. So every time that you think that you're being an undisciplined trader, that's not true. Your logical brain just literally turned off. It's a neuroscience thing. It's chemical imbalance, right? It has nothing to do with being disciplined. You don't have a discipline problem. The problem is you are not feeding the right wolf, okay? So how do you feed the light wolf, known as the prefrontal cortex? You got to act deliberately. When you act deliberately, this is the how. How will I come into the session? What will I do and how I'm going to do it, right? So you make a pre-market plan, right? Then you have a fixed risk, goal of the day, expectations set for the day, your mental state, right? Do like a little mental check-in, and then create check boxes for each step of your system, okay? So we're going to go one by one. So when we talk about pre-market plans, all of this can fit under your pre-market plan, to be honest with you. So when you have a fixed risk, you got to really ask yourself, what dollar amount am I okay with losing, right? Instead of thinking, how much money can I make? Think, how much money am I willing to lose to find out if my trade is going to work out? Or what is the max amount of money that I can handle before I get emotional, go on tilt? And you got to know these answers about yourself. So you got to have a fixed risk that aligns with not only your account balance, but your mental account balance as well. Then you have to have a goal of the day. A lot of times your goals should be, and I always say this, and I'm going to go deeper into it later in this video, but your goal of the day should be yesterday's weakness. So yesterday's weakness is tomorrow's goals. Okay, so wherever you fell short at yesterday, if it was violating your risk, or if it was, like I said, over leveraging, over trading, revenge trading, any one of being reckless, fearful, any one of these things, the next day, choose one error that you normally make that causes 80% or 90% of your issues, and make that your goal every day not to do that, or an action that opposes that. So you're feeding your light wolf instead of the dark one. Then you have expectations of the day. One thing about trading is the worst possible thing when it comes to trading is being caught off guard. Pretty much any type of surprise. You do not want to be surprised. You want to take every single situation into effect. And a good way to do this is the if-then statement. If X happens, then I will do Y. Okay. A lot of times for me, whenever I place my stop loss, it's normally an invalidation point. Meaning, if price hits my stop loss, that's not a random arbitrary place that I'm like, okay, I don't want to lose more than 2%, or I don't want to lose no more than $500 on this trade. So I'm just going to bring my stop loss to a point where it's $500. No, I follow market structure and I make sure that my risk matches market structure, right? So if my stop loss is at $100, right, or market structure is telling me that my stop loss should be placed at $100, then I size appropriately to make sure that my daily max loss or my per trade max loss matches market structure. All right. Then you have mental state. This one is pretty big because you have to be honest with yourself, right? And a lot of times, that was pretty cool. And a lot of times it's like we take those things that we know and we create a challenge out of them, or make it seem like we're not good enough, or we can take on the challenge, if that makes sense. So if I wake up tired, I'm going to sit here and say, well, the grind doesn't stop and I'm tired right now, but I'm going to push through because that's what successful people do. No, fam, don't do that. Like, if you're tired, sit this one out. If you're mentally exhausted, sit this one out. If you have a lot of chaos going on at home or in your personal life, sit this one out. Because at the end of the day, trading is nothing more than a mirror of your internal state. So depending on where you are in your life and how you feel on the inside, it will reflect on the charts, whether you like it or not. That's just how it works. Okay. So just be honest with yourself. And if you're not in a clear space, give yourself some grace. Come back tomorrow. Wait till the next trading session. All right. Also, let me add this here. The goal of the day. So it's going to be yesterday's, and I'm pretty sure I wrote this later in the presentation, but yesterday's weakness is tomorrow's goals. Okay. And then make sure your say your account balance matches your mental balance. No matter what you do in trading or in life, everything will always come back to how you view yourself. It's always going to come back to an equilibrium, and you are the equilibrium. Your mental, your mindset, everything that you see yourself as. If you feel like you're not good enough, then your account balance will come down to somebody who's not good enough, and you'll blow the account. If you feel like you're worthy of everything that you get and you see yourself as being exactly what you are, a successful trader, then you'll be that. Okay. So please understand that your mindset is literally the equilibrium, and everything in your life is going to come down and match that. There's this Bible verse. It's in Matthew, and I might like chop this up, bro, but you'll get the essence of the message. But basically it says those who have an abundance, or those who have a lot, will always receive more, while those who have less will give up the little that they have. And what that basically means is that those people who have acquired a lot, they have a certain mindset, right? And they have a certain mindset and a certain thing about them that invites success, that invites all these positive things coming to them, because that's who they are. Where people who are more in a scarcity mindset, more in a survival mindset, they will lose the little that they have because they don't have a mind of abundance. They're not welcoming success. Their aura, their energy, their frequency is not welcoming this because they don't see themselves as being that person, that receives it. And the fact of the matter is, and I know I'm going on like a rant right now, but the fact of the matter is, you are exactly who you say you are. So if you say that you can't, you're right. If you say that you can, you're right. If you say you're this, you're right. And if you say you're that, you're right. The disconnect comes when you try to match your reality with who you are internally, because your reality and everything around you can reinforce that you aren't who you say that you are. But once you emotionally disconnect from the things that you have in your life, and once you emotionally disconnect from the P&L and you focus on you, i.e. the process, then, and give everything time to match you, then it's up from there. Another thing is create check boxes for each step of your system. This has so many benefits, and the main thing is, it eliminates doubt, and it also eliminates self-blame. So whenever you lose a trade, that doesn't mean you did something wrong at all, right? But every time we lose, we think that we did something wrong. So therefore we try to make up for it. And congratulations, psychopath, you actually have a conscience, right? So if you fuck up, you try to make up for it. That's a good thing. But you need to understand when it's your fault and when it's a normal probability-based loss. So trading error or trader's error versus a probability-based loss. What's your win rate? What's your win rate? If you have a win rate, that means you have a loss rate. But none of us consider that loss rate actually exists. So if I have a 70% win rate, that's good. But since you're ignoring the 30% that your system has to give you of losses, you're going to kind of confuse that 70% with 100%, like you're supposed to win every single trade. So consider your loss rate. Consider that your system owes you 30% of losses if you have a 70% win rate. It owes you 50% of losses if you have the 50% win rate. Like, loss rate should be talked about just enough, and they should be getting kept track of. So therefore, when something's actually wrong. For me, I have like around a 55 to 60% win rate. So I know that my system has like a 92% chance of catching 5 to 6 losses in a row. If I didn't know that, then I would think that I'm doing something wrong, and I would go on tilt by loss number 3, maybe even loss number 2. Shit, some of you are loss number 1. You feel me? So go ahead and look and see. And we'll look it up right now, actually. I got time. So basically, loss rate. Oh, no. We're going to do win rate to risk reward chart. Let's do that. So we're going to do images here, and let's look at this one. Oh, actually, it's this one. All right. So, oh no. Okay, here it is. Whatever. So here it is. So if you have a 55% win rate like me, as you can see right now, the probability of seeing at least X consecutive losing trades within a sample size of 50. So out of 50 trades that you take, if you have a 55% win rate like me, then you have a 97% chance of losing 5 trades in a row. If you have that expectancy and you know that's liable to be the case, then you will be able to take losses a little bit better, because you know that's a 97% chance you'll hit 5 in a row. And if you don't hit 5 in a row, you should be happy, because that means you beat the 2.9% chance, right? Now, once you get to the 7th losing trade consecutively, it drops down to 15%. 6 is 31%. That's a 66% drop. And then right here, you have another 15% drop after that. So it dramatically drops off. Now, if you go past 7 consecutive trades, you know that you're probably doing something wrong. It's probably a trading error at that point. Okay. So that's what I mean by not getting caught, with surprises or whatever. So with that being said, be intentional. The why. All right. So write down, why are you trading today? And it can't be money related, right? Like, what part of you are you trying to improve today? What's the 1%, right? Like, every day get better 1%, and then at the end of the year, that's a 365% return. So today, what is that 1%? What part of you are you trying to improve? And that should be something that you write down before every trading session. And that can also align with your goal of the day. Now, which trading sin will you correct? So will it be recklessness, right? Will it be fear? Will it be greed? Will it be perfectionism, right? Which one are you going to go after? Which one is causing 90% of your problems? You know the answer to that. So ask yourself, which trading sin will you correct? And understand that one improvement is greater than all the profits in the world, because we're talking about longevity. If you do something or commit a trading error or a trading sin and you make money off of it, that's reinforcing horrible habits, and you will eventually blow up. That's not good for the long term. You always want to think long term. And that's the thing with trading. Trading is a short-term activity, quote unquote, but it's really a long-term investment. Like, once you stop treating trading exactly what it is, which is kind of like a short-term buy and sell, like, don't confuse the fact that you're buying and selling within a few days or a few hours or even a few minutes. Don't confuse that with the whole thing being short term. Like, this isn't a gamble. This isn't a lottery ticket. Well, by definition, it is a gamble to a degree. You are exchanging something of value in hopes to gain something of value. That's a gamble. But this is a long-term investment. This is something that you got to look long-term, because the fact is, the law of large numbers state that the more attempts that you have, the more that your edge will emerge. Therefore, the results will converge, but over a long period of time. So if you flip a coin, it's 50% heads, 50% tails. If you flip it 10 times, it may land on heads 7 times. It may land on tails 3 times. That doesn't mean heads have a 70% chance of winning. But if you flip that fucking coin 1,000 times, it may be 498 heads and then like 502 tails, if I did the math right? So it's all about consistently executing your plan and consistently executing your edge flawlessly over the long term, okay? And your edge will emerge. So be present, right? This is key, because think about it. A lot of us think in possibilities. We think, okay, the reason why I'm over leveraging is how much money I can make if this works. You're thinking about the future. And then a lot of us are a little bit more fearful, where it's like, okay, I'm scared to take this trade, even though my system is looking dead at me and this is a high quality setup. I'm afraid to take it because yesterday I did the same thing and I lost and it hurt really bad. So therefore, you're like intervening with the process of continuously playing probabilities until your edge emerge. And it has nothing to do with your identity. It has nothing to do with your self-worth. Wins and losses are nothing more. I'll say this. Losses are nothing more than the door you have to walk through to get to your wins. If you have to lose 30% of your trades in order to meet your 70% wins, you got to do that. All right. So be present, execute your system as it shows, right? Don't think about how much can you make. The moment that thought comes into your head, you already know you need to come back to the present. Okay. Don't try to predict a market. That's not your job. Predicting the market, we are not market makers. We're not market movers. Predicting the market is not our job. I really don't care if the market goes up or down. All I care about is if my check boxes to my system gets checked off. You feel me? So I'm playing the game of a casino owner. I'm just trying to take as many trades as possible that aligns with my system flawlessly so my edge can emerge. It's not about trying to predict a market and seeing if you're right or wrong. The more you do that, the more you lose. The whole goal is to execute your system flawlessly as many times as possible over a large sample size, over a large period of time, and you will yield a profit. So, be a casino owner, not a market mover / maker. Whatever the market does, it's none of your business. So, what is the market currently showing you? That's the thing. This is one of the things that I hate about biases. Everybody goes into like, oh, you got to have a bias. No, because if you have a bias, then that idea will be cemented in your head, and then you will unintentionally only look for opportunities according to your bias. So we don't see reality how it is. We see reality how we see it, right? Through our beliefs, right? So that's why a lot of times if one event happens in front of me and you, I can interpret it one way and you can interpret it an entire completely different way or whatever, but it's the same event. So what that means is we don't see reality for what it is. We see it for what we believe it to be, So you got to be grounded enough to know and, have some type of humility to see like, okay, if I stand from a non-biased point of view, what is the market showing me? Okay. So I don't really support biases, if you do have a bias, make sure you have a if-then statement. So if this works, then I'll do that. If it doesn't work, then I'll do that. Okay. So next, to feed the light wolf, your prefrontal cortex, to keep your logical brain in check and in control, you have to slow down and encourage patience. That's the thing. You got to slow down and encourage patience, bro. Okay. So wait 5 minutes. I didn't even finish this. Wait 5 minutes before entering your second trade. That's an idea, right? If you lose the first one, wait 5 minutes before entering your second trade. Take a few deep breaths, close your eyes, take 10 deep breaths, right? Go for a walk. And also, when I say give advice to your friend, that kind of makes what I'm getting at is give yourself advice as if you were talking to a friend. So if your friend hits you up and say, hey, bro, I just caught a huge L, trading NASDAQ and Q, bro. I done sent minis. I wasn't supposed to do that. And I'm fucked up right now, bro. I'm sad. You're not going to talk to your friend how you talk to yourself and be like, you got to go harder. Lock the fuck in. Fuck's wrong with you? Yeah, come on. You're not going to do that. Talk to yourself like you talk to your friend, bro. Give yourself some advice. And honestly, I will even go on to say when I have red days, those are my self-care days. Meaning I try to turn the energy around and try to make red days positive instead of beating myself up. There's no point of kicking a dead horse. You know what I'm saying? So, do things that will encourage your prefrontal cortex, your light wolf, by slowing down, being patient, backing away, to creating physical space between you and your computer, going for a walk, catching some natural dopamine. Okay. And we'll talk about the dopamine thing later on. So we have looking at the bigger picture. First thing up is don't pay attention to the noise. And I talk about this a lot. I define noise as price action, as all price action between your stop loss and take profit. So the moment you enter a trade, you place your stop loss, you place your take profit, and how the market gets to one or the other of those targets is none of your business. This is something that I struggle with till this day, honestly, right? So, just keep that in mind that it's all noise. Place the trade, get up, and walk away. And if you're able to walk away, then that means you did something right, because a lot of times when you're on tilt, your eyes are glued to the screen, you have complete tunnel vision, you have too much money on the line to get up and walk away, right? And there's two lessons in that. One, if you stay locked in on your screen and you're not willing to walk away, that means you're also willing to interrupt the trade. And two, to piggyback off of trade interruptions, it's always cheaper to just get stopped out at your original stop loss, which is also market feedback and a validation point. It's always cheaper to just get stopped out on that trade than jump in and out of trades, paying attention to the noise and trying to guess the right direction. That's how you blow up. That's death by 1,000 cuts or some shit like that. So it's always cheaper just to get stopped out. Remember that. Look at the higher time frame when you're confused. This is a big thing for me because we've all experienced trades where everything looked amazing. You wasn't confused. You had clarity. There was no questions asked. You see what I'm saying? Like, no questions asked whatsoever. So that just goes to show that you know what to look for and you know what it looks like when it appears and it presents. So when you're confused, you need to trust your own skill set and your own eyes to a point where you're like, okay, I'm confused. This is an ultimatum that the market is giving me. I don't know if it's going to go up or down. So fuck it, I'm going to take a trade. No. You should be asking yourself and telling yourself, I'm normally not confused like this. Maybe I should look at a higher time frame. If there's like constant consolidation, chop, let me look at a higher time frame. Let me look at the bigger picture and trust that you know. The fact that you're confused, you need to trust that you know what it looks like. And if you're confused, then there's something wrong here. Okay? So trust that you know what you're looking for, and clarity when you see it. And of course, we're always going to say this line: clarity of price comes with time. That was a bar. Write that down. Shout out Neuro. Clarity of price comes with time. Okay. Now, next is look at 20 trades before going on tilt. What does this mean? Every single trade is completely random, and every trade is an individual event that has nothing to do with the last or the next one, and every moment is unique. Shout out Mark Douglas. That was a bar. So what that means is you have to give yourself a sample size before you start going on tilt. All right. Like I showed you with the whole probabilities of seeing at least X consecutive trades, right? This is over 50 trades. So if this is over 50 trades and I'm talking about 20 trades, let's say 25 trades and just cut it in half to make it simple. So that kind of means that you can definitely take about three losses in a row, right? If you get more than 5 losses in a row on a 20 trade sample, then you can tilt. You have my permission to tilt. But even if that happens, it's probably your fault because the math is not going to lie. All right. So judge your performance. Can't spell judge. Judge your performance on sample size. On a decent size. Can't spell. Decent sized sample size. Okay. Not the random fluctuations of each individual trade. And the thing about random fluctuations of each individual, the outcome of each individual trades, if you continue to attach your value and your self-worth, like, do you know how tiring it is to feel like you're on top of the world today and then feel like you some shit the next day, like you're trash the next day, and then just keep on going with this volatile cycle? Like, do you know how tiring that is? Like that kind of sucks. So, don't attach yourself to random fluctuations of each individual outcome. All right. So, last one, encourage delayed gratification. So what this means is don't be too hasty and don't be too urgent to take out a fucking payout because you made it. If you made $1,000 and you're eligible for a payout, don't fucking take out $200 or $500 because you're going to most likely blow up the next day. You don't have enough buffer. So build your buffer, right? Build your buffer. Think about the bigger picture, right? Think about surviving, right? And thank God for autocorrect. And give yourself space to lose, all right? Another thing is base hits. This is one of the things that I had to learn because I was always going for home runs at a certain point in my trading career, okay? Make sure that your take profit is something that can be attainable every day. Okay, so don't be trying to go into the session trying to make a 10R every single day. Like, that's just ridiculous. And trading is a long-term investment. Like I said, I think that we confuse the fact that we don't hold securities for a long period of time, and we take that fact and then we put it on the game of trading and we treat it like a gamble. We treat it like a lottery ticket, and we don't treat it like a career. We don't treat it like how you would treat a 9-to-5. You get a actual career and then you invest into a 401k and get that 401k match from the company because you know that you're going to be there for the next few years, if not retire there. Why not view trading like that, right? So even if you hit that payout and you make $10,000 and you make $15,000, shit, you can make $1 million. Does that mean you're going to stop? I don't think so. I think that you're going to be trading forever. So why does it matter if you made $1 million today or if you made 5,000 today if you're just going to keep coming back and doing it? So that's why it matters to just like really care about the craft, your performance, and just treat trading with some respect, right? It's a career. You got to really ask yourself. And once I asked myself this and I told myself this, it kind of put everything in perspective. I know that I'm going to be trading for the next 20, 30, 40 years for a fact, right? So it's like, even if I lose today, okay, I'll be back tomorrow. If I win today, okay, I'll be back tomorrow. I made $20,000 in a day. Okay, I'll be back tomorrow. If I blow up all my accounts and lose all my money today, all right, well, I'll be back tomorrow. Once you get that perspective, it kind of relieves the pressure on you and you can kind of like slow down, right? Because no matter what, you're just going to keep doing it. So why does it fucking matter? All right. Stop chasing payouts, invite them, and schedule them. So the more that you chase, the more that you're admitting that you don't have. Therefore, you're not inviting anything. All right. So stop chasing payouts and work on yourself and make your trading and yourself something that actually invites payouts to you. Right. Like, you don't chase a girl and try to like hawk her down and just try to show her that you're worth it. Like, nah, that's not going to be good. Make yourself very dateable. Make yourself attractive. Because the fact of the matter is, you want somebody that loves you. You want somebody that likes you. You don't want to go chasing improving yourself because that just shows that you lack, and that goes back to that verse that I said. Pretty much the more you lack, even more you're going to lack. That's a bar. All right. So I also said schedule them. There's a lot of times where you take out payouts, and I'm pretty sure a lot of you been through this or heard something like this, but you'll take out a payout and then you'll blow the account the next day. And you'll chase a payout so much that you don't know what you're going to do after you get the payout. So once you achieve that goal of getting a payout and you get paid out, what next? You don't have a schedule. You don't have a plan. Like for me, I only pay myself like once a month. And then once I get a healthy enough buffer to a point where my profits are getting bigger because my buffer is so big, I can risk a little bit more while keeping the same percentage respected of my risk, then I can probably start taking out payouts bi-weekly. But I wouldn't really go beyond that or less than that. Like I wouldn't really do weekly payouts. And the more you schedule them, the more you realize that, they're so far apart. Like the payouts are so scheduled far apart that you have no choice but to get better and focus on your skill set and focus on your performance and your execution, because that's going to happen every single day, where the payouts only happen twice a month. So it's not, just keep that in mind. And that also brings out the long-term perspective as well, because if you're thinking, damn, a payout once a month, what the fuck? Like, bro, you're just in it for the gamble, and you're just going to continue to feed that dark wolf. So how do you feed your dark wolf, right? How do you contribute to your trading failures? How do you contribute and continue to welcome all those blown accounts, impulsive trades, going on tilt? How do you encourage that you may or may not know that you're doing? But I'm going to bring it to your awareness. First is acting on impulse, okay? So jumping in a trade because the market is moving. A lot of people get so excited once 9:30 Eastern time hits, or whatever, like 6 p.m. Eastern time when Asian session hits. You get so excited that as soon as you see the market moving, you gotta hop into something. That's called a trading addiction. Okay, that's called getting high. Like you couldn't wait till the plug came to your house so you can get your hit. So acting on impulse and acting very hastily, very urgent. That relates to the dark wolf, the amygdala, when you don't have time to think, when you just want to just jump in there, when you just want to risk a lot, right? The more you don't think, the faster you move, the more tunnel vision you have, the more you are feeding that dark wolf, where the more deliberate you are, the more intentional you are, the more you control your breathing, and the more you see the big picture and make physical space between you and your desks, those screens, those charts, the more you feed the light wolf, which is your prefrontal cortex that will lead you to all of your goals and aspirations, okay? Now, increasing size without thinking, recklessness, okay? I have been subject to this where I'm just clicking the button. I'm going to keep it a stack. I'm just clicking the button. Even though my quantity is on 3 micros, I didn't click that shit about 12 times. Now I'm 36 cons in. You feel me? So I'm just clicking the button just to click it. Not even considering the risk or consequences or my own mental health at that. All right. Trading minis by accident. I'm going to be one of the first people to say this. There are no accidents, okay? Any type of accident as far as sizing or trading minis instead of micros and stuff, that's just your subconscious doing what it wanted to do, and it just seeped through and you did that. Like that's what you genuinely wanted on the inside, even though face value, right, on the front end of things, you wanted to obey your risk, okay? So please understand, there are no mistakes. And by chance, if there is, did you get out of the trade immediately, or did you want to wait to see what happens? I'm pretty sure you wanted to wait to see what happens. If it happened for a reason, if God granted that, right? So then, right? Is this wrong? Whatever. There we go. I like that. So focusing on the future or the past. We talked about this. So a few wins equals an inflated ego, right? And then a few losses equals doubt and fear, and that takes over. So basically what happens is you're attaching your self-worth and identity to random outcomes that you can't control, which is completely unfair. Imagine going to jail for something somebody else did. You wouldn't stand for that, right? But we continuously do it. Instead of attaching our self-worth and identity to our controllables, which is the only things we can control, which is our process, our risk, our entry, our stop loss, and take profit placement. Okay, I will say following the process. And the most important thing is trusting your system. You got to be able to trust your system with your life, with your livelihood. How can you, a lot of you want to be full-time traders, but how can you be a full-time trader if you don't trust your system with your livelihood? You got to be able to trust your system with all of your bills, with, like I said, with your rent or mortgage, with your car note, with your car insurance, with, your groceries, taking care of your kids. It's that deep. You got to be able to trust your trading system that deep. No diddy. And you got to be able to trust yourself and your execution that deep as well. So, thinking about the outcome of the trade, I'll be the first one to say that is none of your business. The more you think about the outcome of the trade and you start thinking about the future, and you see how everything is tying in together, you got to be present if you want to be successful, because you just got to look at what's ahead of you and you got to manage your risk and you got to place the trade once your system and your setup and your edge presents itself, because the only time that you actually increase your risk is because you're thinking in the future about how much you could make on this outcome of the trade if it worked in your favor, instead of thinking presently as in, okay, what's going on right now? This is my edge. What's my risk parameters? 3 cons, 3 micros, cool, 3, edge is there. Buy or sell, stop loss, take profit, or stop loss and take profit if I'm going short, and I let it ride. Now, if I think of it just like that, and I don't think in any type of capacity, this could be a banger, or, this could be a major loss. If you got to think about the outcome of the trade, think about the loss. Don't ask yourself how much you can make. Ask yourself, how much am I willing to lose to find out if this shit is right or wrong? Okay? And then how much you can make. Like I said before, you keep thinking in possibilities, what could possibly happen, then you will never be successful. You have to think in probabilities. And the fact is, you could think in possibilities. That's very optimistic, but you got to know when to apply it and when not to apply it. There's certain concepts and principles that you should not apply in certain things. You got to play the right game. You know what I'm saying? So acting and moving quickly, I like the word haste and urgency. The quicker you move, the more urgent you are, the more hasty you are. That just goes to show that you have a scarcity mindset, because if you believe that opportunities was all around and you believe that there's enough money to go around for everybody, then there's no reason to move quick. If you got a refrigerator full of food, you're not going to try to scarf down everything that you can before other people come home. It's like, shit, bro, live in a grocery store. Like, you're living in a grocery store. You're not, no offense, you're not like in the third world. And if you are, then, still this ain't the way. All right. So every time you're stopped out and then you enter a trade in the opposite direction, who's guilty of that? Raise your hand. Raise them high. That's me. I'm guilty of getting stopped out, flipping my bias immediately. Oh, I got stopped out. Let me flip my bias and I'm going to go short, or I'm going to go long if I was short. And that's when the snowball effect starts coming. That's impulsive behavior. You're feeding that dark wolf. So therefore your emotions are getting stronger. The amygdala is getting stronger. Your dark wolf is starting to, you ever seen Twilight? Sam the black wolf and Buddy just rose up like that tight. Yeah, that's what's happening here. Okay. So you're feeding the dark wolf that's going to lead you into tilt. Something that small is going to pretty much feed the dark wolf. And if you blow up, then you know why. Getting high. right? Trading addiction. Tunnel vision, eyes glued to screen. How many of you guys have over leveraged to a point where you literally cannot take your eyes off the screen? You can't take your fingers off the mouse. You can't get up and walk away because there's too much money on the line. The moment you have your eyes glued to the screen, you are also saying that you're willing to interrupt a trade and jump in and out until you blow up. Okay? That's what you're saying. And the complete opposite of that, like I said earlier, is looking at the bigger picture, creating space between you and your screens and your charts, and being able to get up and walk away. If you're able to get up and walk away, you're doing it right. Okay? Subtle, shallow, or fast breathing. Breathing matters so much. If you catch yourself and you holding your breath and you're trying to see what happens, or you're just like that, brother, you're not in a good place. You're feeding that dark wolf. Okay, you're feeding the dark wolf. Okay, you're shutting down your light wolf or your prefrontal cortex. Okay, just understand that. Chasing dopamine. So dopamine is not necessarily the outcome, but it's all the excitement and the rush that you felt before you found out if your take profit or stop loss was going to get hit. And the thing about dopamine and getting high off that shit that you probably don't know about your brain, is the fact that your brain doesn't care if you win or lose, right? Winning can be addictive, but also losing can be very addictive as well. But the outcome never really matters. It's what happens in anticipation. It's the anticipation part that you're getting high off that you love. It's the excitement. And then once everything hits and you spaz out and go on tilt, and all the emotions simmer down, guess what? Not only did your emotions simmer down, your dopamine receptors simmer down. Everything else simmer down. And guess what you're going to want to crave again? That excitement. Okay? So if you go chasing dopamine highs, please understand that losing is an addiction, because you're not addicted to winning or losing or any type of outcomes, right? You're addicted to the anticipation. All right. Then instant gratification. One thing about instant gratification is a lot of times it doesn't leave space for abundance. Okay. Now, I know that I talked about how to feed your dark wolf, so you know how to feed it. So you know that if you do these actions, what you're contributing to. You also know if you do these actions on how to feed your light wolf, you know what you're contributing to. So feed your light wolf, but also you need to learn how to starve your dark wolf. Okay, you got to learn how to starve your dark wolf. So how do you start it? You shut down the charts, right? Meaning once you enter a trade, you shut it down, you walk away. Once your session is over, shut it down, walk away. When you're bored, no charts, go live your life, right? The whole point of us trading is so that we can make an egregious amount of money in a short period of time and live our life and have the whole day to ourselves. So trade for the reason why you started trading. Don't stay at the charts all damn day. You might as well get a 9 to 5. Stop checking to see what's going on so much. Go have fun. I have a lot of traders that I coach, and if you need a coach, go ahead and click in the link below and, apply for one-on-one coaching, and I got you. But one thing that I've heard a lot of my traders say is, yeah, I check the charts just to see what's going on. Why? Are you trading? No, just want to see what's going on. Why are you being so nosy? Why do you care? It doesn't do anything for you, right? Detach yourself. Detach yourself. Detachment. Let it go, right? Like nothing that you chase, you're going to really get for real. And if you do, you probably chase so hard that it probably wasn't even worth the work that you put in to even get it. Detach yourself. Learn to appreciate boredom. This goes into starving that dopamine addiction, right? Learn how to sit in silence. Read a book for an egregious amount of time. Go outside without your phone. No social media. And overall, just do a dopamine detox. When you learn how to be bored, you become more patient. You become more, comfortable with being patient, comfortable with being bored. So as your system is setting up, you could just sit here and it doesn't bother you. You don't have to do anything. You learn that you don't have to do anything, right? Like just because you are not taking action, that doesn't mean that you're fumbling. It doesn't mean you're fucking up. This is a whole different game. A lot of us take the game of the 9 to 5 and competition and the finite games, right, of winning and losing, and I have to go hard and hustle culture, and you take that and you put in the complete opposite game, which is an infinite game, which trading falls under, where leverage is more important, doing less but pushing more, right? Waiting for quality setups. That takes time, right? And if you're too busy moving around doing actions and shit like that, you might miss the opportunity. Don't try to redeem yourself. Let go. This is a major one. A lot of you guys, you revenge trade. The only difference between revenge and redemption is that revenge is when you're trying to make up for what you did or what something did to you. So you feel like you're victimized by the market. So if something does something to you, you feel like a victim and you want to get back in an emotional way. Redemption is noticing that you did something wrong and you're trying to fix it in a more disciplined and respectable and mature way. Write that down. So, how can I find out if it was my fault or a probability-based loss? This goes back to the very first thing we talked about, which is creating check boxes for each step of your system. Every time you see a step of your system, check off the box until your entry occurs. Then you can go back to the boxes checked and make sure you did everything that you could. And once you notice that you did everything that you could and you still lost, you know that it wasn't you because you followed the system. Another thing that I do is that I mark up my charts in real time. The best advice that I can ever give you to keep your light wolf in check, to keep your prefrontal cortex in control, is to journal and mark up your charts in real time during your trading sessions. That will slow you down and keep track of your thoughts. You keep everything in your head, you're going to forget, right? You're not going to be able to keep up with what you just thought about. Thoughts come and go, bro. They come and go and you don't even know it. And this is how I know. Close your eyes, try to meditate, and try to clear your mind. Watch a random thought pop up, and next thing you know, you're going down a chain of thoughts. And now you don't even know how you even ended up on the subject. You start thinking about fucking wolves and shit, and now you over here thinking about what happened on Game of Thrones a couple years ago and some other shit, right? So, if it's my fault, can I forgive myself and let go by shutting down the charts? You don't have to redeem yourself every time or get revenge. Okay, you fucked up. It's okay. We all do it. 90% of the time, you're not fucking up. So give yourself some grace. And best of all, whenever you have a red day, that means a self-care day. That means you're having a bad day and you need to take care of yourself. If your friend came to you about a bad day, I mean, I don't think that you would beat their ass, or if you do, that's wild, but I don't think that you would, treat them like shit. So don't treat yourself like shit. If it's a normal loss in my trading system, it's not my fault and my system is working fine. Losses are nothing more than the door you have to walk through to get to your wins. If you lose 30%, if you have a 70% win rate and a 30% loss rate, if you lose 30%, your system is working fine. If you make 70% or some type of deviation plus or minus 5%, your system is working fine. Okay? Learn what stresses you out. What events, occurrences on the charts, or actions you take that increase anxiety, stress, or excitement. For me, a trigger, 90% plus to my take profit and a reversal to stop out. That's a trigger. Okay, that causes me, or like very, very violent pullbacks. Got me asking, damn, what's the probability of this shit going back up, right? And recovering this violent ass pullback. So understand what triggers your anxiety, excitement, stress. And for excitement, that's a good question, because it's like, what do you get excitement out of? Levering up and seeing if you'll win? Be real with yourself. At what dollar amount do I begin to feel fearful and anxiety? Actually, I'm gonna read all of them. At what dollar amount do I begin to feel excited and greedy, right? Your trading account balance will always revert back to your mental account balance. If losing $1,000 scares you and you have an average of a 2R multiple, you'll never make $2,000 on a daily basis. If losing $10,000 scare you, you'll never make $20,000 on a daily basis. So your cap is your mental. It's almost like the Matrix. You know how Morpheus always told Neo, like, it's in your mind, release your mind, free your mind. You can jump from this building to that building. You know, you think that's oxygen you're breathing right now? You're in a simulation. Why can't you beat me? Why am I fast? If you're not stronger than me, if you're not faster than me, then what's the difference between me winning and you winning? It's your mind. Okay. So at what point in my trade does my mindset shift from calm to greedy? These are good questions to ask yourself. At what point in my trade does my mindset shift from calm to fearful? All right. So for greedy, it might be which you perceive as a plus 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 setup that fails anyway, because your perception doesn't really matter. And they probably made an A+ setup for you anyway, just to see if you'll take the bait, and you do. Some things are too obvious. Okay. And then I would say calm to fearful, I guess, when price is grazing that stop loss. And I think another trigger for me actually is when I enter a trade and I get stopped out almost immediately. It makes me feel like I didn't even have a chance. Like, damn, can I get a chance? I was trying to do the right thing and you just cut me off. That's a trigger. Another thing is to trade less. That's how you starve that dark wolf. Less risk exposure, less, I guess, mental turmoil, right? And you just preserve your internal peace. Okay. High quality trades don't present themselves often. So therefore, if you're taking the highest quality trades, then you shouldn't be trading as much. Most profits come from 20% of your trades. Go do the math. And then become a magnet, not a chaser. Meaning, don't chase low quality fucking trades, bro. Just chill. Be a magnet. Wait till it come to you. Let the market come to you. Let everything come to you. Let the profits come to you. Let the market come to you. Let it present high quality setups, and focus on being the best version of yourself. You don't go out finding the best significant other ever. You work on being the most wanted and I guess attractive significant other somebody would want. Whatever you would want, make yourself that, and you should get that, right? So become a magnet and not a chaser. And the last thing, have standards. If the trade doesn't go your way, don't spaz, okay? Conduct yourself. You know, act like a successful trader would after a loss. And a successful trader is confident. One loss is not going to kill them. They know that they're going to come back and they're going to make higher highs, right? Higher highs and higher lows. The more you increase your account balance, the bigger the losses will be, you know, respectfully and relative to the account balance, okay? So conduct yourself and act like a successful trader would after a loss. Handpick a basket of high quality trades. You got to understand that you have a sample size, and your sample size is a basket that represents your quality. So every trade that you take, you're pretty much putting in this basket, this personally handpicked baskets, right? And that represents who you are as a trader. So if I go in your basket and I see these fucking rotten apples and these moldy ass fucking fruits in here, I'm like, what are you doing? What is this? You're not going to be able to eat this. Like, you're not going to be able to feed your family like this, and you're over here picking up moldy and rotten apples and fruits and shit, right? So handpick a basket of high quality trades that you would be proud of, right? Your journal should have screenshots of every trade that you take that looks exactly alike and very high quality and clean and beautiful trades. Take pride in that, okay? Trade on your terms. Don't take anything the market presents for the sake of trading. All right. So what that means is you have to pay commissions. All right. You have to pay fees the moment you enter trade, which means trading is a negative sum game. Okay. So with that being said, when you go out to eat and you tip the server or you pay for your meal, you have standards, and your server is going to have to do what you ask them to do, right? If they want that tip. It's the same thing here. I'm not going to enter a trade and put my hard-earned money on the line and pay these commissions and fees for some bullshit. Like, I want a high quality trade in exchange for these commissions, fees, and possibly losing my hard-earned money. You guys have to work on my terms if I'm going to be the one that's paying. When do you ever pay something and then, except for coaching, that's why I like coaching and consulting, but when do you really pay somebody to tell you what to do other than those two things, right? Most times when you pay, they have to service you. So keep that in mind, right? Trade on your own terms. Don't be a beggar in the market. Don't take the scraps that the market gives you. Wait until you get the full meal. And this all goes back to how you see yourself, okay? So rate your performance, measure your process, all right? And then lastly, make today's mistakes tomorrow's goals. I think all three of these things pretty much intertwine, okay? If you can give yourself an honest rating, right? And if you can measure your process, meaning how many boxes I checked off, or how far was I off from my ideal performance and ideal trade of the day, known as my trade selection. Okay. And then make today's mistakes tomorrow's goal. You have to get 1% better at least every single day. Apply the Pareto principle, where you got to find 1 to 2 things that make up 90% of your success, and 1 to 2 things that make up 90% of your failures. And these are your reinforcements, I can't spell for shit, and improvements. So I hope this video helped you out. Click like, subscribe, and I'll see you on the next one.